Thank you. Good afternoon, everyone. I will not make a long presentation, just maybe come over the proposal that the Commission made, the main options that we have analyzed, the problem that we wanted to fix, and why we think that the proposal we made is a balanced proposal that takes into account the systemic risk on one side and the investor constraint on the other side. So first, I want just to remind the context is that the Commission made this proposal following extensive international work. Many recommendations have been published by many institutions, IOSCO first, Financial Stability Board, ESRB. All of these recommendations have been taken into account by the Commission when drafting this proposal. What is also important to remember in this international context is that the Europe situation is different from the US. These are the two main domiciles for money market funds, and the structure of both markets is totally different. That's why it is also quite difficult to apply exactly the same rules on both sides of the Atlantic. So we have tried to develop rules that match the situation in Europe. What you have seen in Europe and in the US as well is that money market funds are quite useful. We all acknowledge that. They finance the economy, they finance the banking sector, but they have two structural flaws. The first one is that they have a liquidity problem. They are basically offering to their investors daily redemption possibilities, but on the other side, they invest in less liquid assets that may mature in a few days, weeks, or months. And in times of stress, they are unable to redeem their investors. So this is the so-called run factor that increases the pressure on the funds. And in the absence of liquid assets, the fund has to suspend redemption. We have seen many funds in Europe during the crisis that had basically to suspend the redemption due to this effect. The second problem is basically the stability of some funds. We all know that the market is divided between two types. On one side, there is this so-called variable net asset value fund. On the other side, this constant net asset value funds. And this constant net asset value fund that promise this stable redemption price have had a problem to maintain this price during times of stress. So they had to rely on other sources of money to maintain this stability. Because the amortized cost or the penny rounding method does not allow the fund to maintain it in all situations. So these are the basic situations. What the Commission proposed is a two-step approach. The first one on the liquidity, we have proposed to increase the liquidity of the fund by first introducing daily and maturity buckets of assets, so 10% daily, 20% weekly. Secondly, we have proposed to increase the diversification of the fund. We all know that there are some UCITS rules that allow the fund to combine 20% exposure to money market instruments and 20% in deposits. That may make 40%. We have considered that this is too much. That's why we have proposed lower diversification limits. And the third one is basically the so-called Know Your Customer policy that has been inspired by what the US has done in 2010. So basically to say that the fund manager has to anticipate the redemption from its investors. This is the liquidity that will apply across the board on all money market funds, irrespective of being VNAV or CNAV. And then you have these additional rules that will apply only to the so-called CNAV. They will have to build up a buffer. So I know this is the most controversial issue of this proposal. Many investors claim that they will stop investing. Many managers claim that it is unrealistic, uneconomic, that they will have to stop being basically CNAV. But on the other side, the Commission took a proportionate approach, pragmatic one. We have been confronted with recommendations saying we have to ban them, other ones saying you have to do less. We basically took a middle decision, saying that with a 3% buffer, we can avoid much of the problems without banning them. So this is what the Commission proposed. This is now under discussion in the Parliament, soon in the Council, and we hope to have an agreement in the course of this year. Thank you.